Hey everybody, it's John King. It is Friday, the 20th of September. Here we are, just one more full week left in the third quarter, and then we head into the holidays. Can you believe it? We got Halloween right around the corner, then Thanksgiving, and then Christmas, and then we're on to the new year. And we are dawning this new year in a very, very exciting mode when it comes to home mortgages and real estate and financing. Lots of crazy things going on, lots of changes going on. I'm going to dive right in. So first of all, this week, if you've been living in a hole and you didn't hear, this week mortgage rates didn't change. But the Federal Reserve did change what they are charging for the prime rate, for the Fed rate, and it went down 0.5%. Now, I did a long video on Wednesday afternoon talking about this. Everybody says, well, what does this mean? Like, what does this week's rate drop mean? Well, first of all, it does not mean that mortgage rates have gone down. As a matter of fact, it means mortgage rates have gone up a little bit. And if you look, oops, wrong screen. If you look right here, what you're going to see is this is the 10-year Treasury. And we're seeing that back on last Friday, the 10-year Treasury was right about here at 3.63. And then we move into Monday, and it actually fell by Tuesday, all the way down to 3.60. Now, that's not the mortgage rate, but mortgage rates are in a slow dance with the 10-year Treasury. So as they move one direction, the other one moves pretty close to it. So mortgage rates stay tied loosely to what the 10-year Treasury does. And so we hit Wednesday, and the market peaked up a little bit Wednesday morning. There was a lot of speculation about what the Fed was going to do, and then the Fed dropped rates, and then the 10-year Treasury went up, and it went up. And it went up, and it is still up compared to Wednesday. What the heck is going on? First of all, let's take a wider view. Mortgage rates are still, our 10-year Treasury rate is still way down. So this is going back just a month ago, and we see that we were up at 3.9 and we're at 3.7 right now. If we go back even further, and I go back to May of this year, the 10-year Treasury was at 4.6%. We've been seeing rates going down and down and down. They peaked up a little bit in the last couple of days, but the 10-year Treasury rate has been dropping. If we take a wider look, we hit our peak October of last year, and we saw a pretty quick drop heading into December, and that's because last year in October, the Fed said, hey, you know what? We're done raising interest rates. And everybody says, oh my gosh, that's it. Rates are going to fall, and they didn't. And so all of this is about predicting what the Fed is going to do. I talked about that a lot on my video on Wednesday. You can look back on this channel wherever you're watching it, and you can see more about how that works. But what's happening is the market gets ahead of the Fed. So the Fed said at the end of July, we are now going to start lowering interest rates. The time has come to start lowering interest rates. And so if we went to, here we are, September, August, kind of early August, and we saw that we were way up here. And if I go back even further, here we go, end of July. So as we hit July, right here at the end of July, we were still pretty high, and they fell very quickly. The reason rates fell so quickly at the end of July is because everybody knew that the Fed was going to lower rates on September 17th or 18th. Everybody knew it was coming. There was no surprise. We weren't caught off guard because the Fed lowered rates. So mortgage rates fell already in anticipation of what happened on Wednesday of this week. And now we saw a little bit of a knee-jerk reaction because the Fed said, hey, we're not sure how quickly we're going to lower rates. It's all about the data, all about the data, all about the data. And everybody thought, well, once the Fed starts, they're going to do it aggressively. I think they are. But they told us they're not. So they're being cautious in their wording, and that's caused rates to tick up just a little bit. So don't think your rate is 0.5% lower today than what I quoted you on Monday, because it's actually a little bit higher because of this volatility. And I think we're going to stay in this area of volatility for the next couple of months. So what should you be doing if you are thinking of trying to buy? You should be thinking about getting ahead of the competition. I've been saying this over and over again. We've got a lot of people that are scared. They are scared about what's happening with the economy. They're scared about what's going to happen with the election. They're just scared to buy during the holidays, and they're going to wait until next year. And I think next year we're going to see things take off. I think we're going to see, because rates are lower, we're going to see more sellers saying, you know what? I really hate my house and I really want to move. And so I'm going to go ahead and make that move. And those sellers are going to list their home for sale, which is going to open up homes for you to buy and for everybody else to buy. And when people when people see a home that they are interested in, then they're going to list their home on the market, and it's going to create more activity, more inventory, but that inventory is going to bring buyers back into the market. And so you want to think about, hey, can I take advantage of these lower rates? We're in between the mid 5s and the low 6s right now, depending upon a loan program, your credit score, your down payment. I just locked somebody in at 5.25. I locked somebody else in at 6.5. So there's a wide range of interest rates based on what your needs are. But what you should be thinking about is there a way I can make this happen before the end of this year? Because I think the volatility and the fear is going to continue for the next 3 months, and your opportunity to strike is when everybody else is afraid. Now, what should I be doing and thinking if I own a home? So that's really, really important. If you own a home, you've got to be thinking, it's time to evaluate to say, is this the right place for me long-term? Now, long-term doesn't need to be forever. I'm not talking forever, but I'm talking about where am I compared to where I thought I would be right now? And is it time for me to make a change? Is this house the right house for my family? Now, if you love the location, you don't want to move, you can do a renovation loan, you can pull cash out, and you can refinance to make the house you want. But for a lot of homeowners, it's an opportunity to reevaluate your financial position as well. Unfortunately, consumer debt, credit cards, has skyrocketed since the pandemic. And I know a lot of my clients have a lot of credit card debt. And I've been talking to people for the last year and a half about consolidating debt. A lot of people have taken out second mortgages or home equity lines of credits that are at pretty high interest rates. A lot of people have added even more credit cards on top of that. And if you are a homeowner and you have unsecured debt, credit cards, or even home equity loans or lines of credit, we should be talking about what your game plan is. It doesn't mean we should be refinancing, doesn't mean we should be pulling cash out. It means we should be having a conversation and running a total cost analysis, looking at how much you're paying today versus how much you could be paying, both in the long term and in the short term. The final thing I'll tell you if you are a homeowner is you need to get signed up for Homebot. Homebot is a system. You want to sign up for it through me. The link is in the text or in the description down below. And here's what Homebot is. Homebot is a monthly digest that gives you all you need to know about your property, emailed to you free of charge every single month. So I'm going to give you an example here. So this follows Holly homeowner in her journey to build wealth. She just bought her first home for $385,000, and she put $77,000 down. So she's got some equity starting out right now. And as we journey forward, we're at a place down the road where Holly says, hey, you got your Homebot from me, and it shows your value's gone up. It's at 410. Every single month, it's giving you a ballpark of your value. If you don't think the value is accurate, you can tune the value up or ask us to actually do what's called a CMA, or a comparative market analysis, where we get a realtor to give us an idea of what your house is worth today. So at that point, Holly says, oh my gosh, I've got $102,000 in equity, and it tells you that as part of your monthly digest. It's like your bank statement for your home equity, because your home equity is going to grow a lot faster than that 401k is going to grow. And this gives you a statement so that you see what it looks like. So now we're at a place where Holly says, hey, she got a tip that says, hey, if you pay an extra $300 a month, this tip is part of the monthly digest. You could save $54,000 and pay off 6 years faster. And at that point, she's built $156,000 in home equity because she's paid attention to these tips and tricks that are helping her to build wealth. And then she gets notified of a great refinancing option where she can refinance to a 15-year loan at 4.125, which gives her long-term savings, and her payment goes down by $100 a month. She is shortening her term, and her payment goes down. Now, that may or may not work for everybody, but you get a personalized digest that tells you, hey, you can shorten your terms, but your payment's going to go up. Or you can't save money, it's not worth doing. And at this point, Holly's built $230,000 in equity in her home. And now she's getting this monthly digest that you can sign up by going into the link in the description down below. And she says, you know what? I'm going to take some cash out of the home because it sent me an email saying that I could estimate about $43,000 in cash out. And so Holly pulls cash out of her home and she remodels the home. So it's got accurate loan to value calculations because it knows how much money you owe, because it's watching your balance based upon making normal payments. If you pay extra, you just tell it you paid extra and it updates. And then it knows the value of the home ballpark. And so it says, hey, you could get $43,000 and she's at the point of $280,000 in equity. And now it sends her an email that says, hey, by the way, as part of your email, it covers all of these things. Homes like yours in Denver, you could rent out a bedroom for $145 a night on Airbnb. So she rents out the room on Airbnb, and she's at the point where she's built $330,000 of equity, and then she uses that equity to turn around and buy her dream home. And she's built up $505,000 in equity, and your monthly Homebot Digest is going to show you all of this information. So if you are a homeowner and you are not getting a monthly email that outlines your equity position and what move you could be making, sign up for it. It's free. We don't obligate you to do anything. You're just entering in your home address and the details about your mortgage, and then we send this to you on a monthly basis. All right, so that is it for the mortgage market updates. I'm going pretty quick today. If you have questions, feel free to post them live. If you're watching recorded, post them, and I'll get back to you afterwards. I do want to remind everybody who is a Dream for All waitlister or voucher recipient. The vouchers, the first round of vouchers are up next week. If you have a voucher and it's expiring next week, you have the opportunity to go in and extend your voucher. If you are a waitlister, hope that nobody extends their voucher. I do think there's a lot of people that are not extending their voucher. They're not watching me. They're not aware, not watching their email from Calhafa telling them that, or they just figure, you know what, I'm not finding anything, but they're not going to proactively go in and cancel their voucher. I think there's people who maybe never even knew they got a voucher, because I talked to somebody a month ago who was in that case. And so there are going to be people whose vouchers are going to go away next week. If you're on the wait list, I expect by this time next week, you're going to have a pretty good idea of how much further you've come down the wait list. Not as good as what I was hoping, because they're granting extensions to pretty much anybody who's asked for them. But for the big picture, you're definitely going to see the biggest opportunity to move down the wait list by next Friday. All right. Well, I don't see any questions, but please just continue to look to me as a resource. I want to help guide you through your home ownership, equity, and wealth building journey. So whether you own a home, whether you're looking to buy a home, whether you just have like looking at homes, reach out to me if you have questions. If there's something I can do to help guide you, I want to make that happen. And I look forward to taking great care of you and anybody you trust to refer to me. Thanks so much for watching, everybody, and have a wonderful Friday. Enjoy your weekend. Bye.